In this video, traders, we're going to look at 5 ways to control and manage dopamine in trading. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Alright, so in a previous video that's been uploaded before, or if it hasn't, it's going to be uploaded soon, so make sure you are subscribed to the channel by hitting that link below or clicking the button below. I talked about dopamine, how it affects traders, where it occurs in the real world. We talked about some of the things in the real world, what it's all about, the chemical process that goes on. And we recognize then that as human beings, we're vulnerable to making decisions that are influenced by the dopamine. So in other words, if we have that euphoria feeling, we're trading far more risk seeking, we're trading more size, we're trading more frequently to get more of that good feeling. And so, we talked a lot about how to manage this a little bit, or really how to watch out for it and be sort of alert if it's something that might be affecting you. But in this video, as what I promised we'd talk about today, is some of the things that we can do to control this. Now, listen, guys, we're not robots, we're human beings. And we are always going to feel emotions. We're going to have this dopamine effect, some more than others. But we need to be careful that we are managing it and we're not blindsided by this hidden risk of this naturally occurring chemical in our body that ultimately is controlling our decisions and could force us to make errors in our trading that ends up losing us money. So the first thing I want to do is, I don't think that any trade is a sure thing. And why is this? Because when you think, you've probably done this yourself, I know I've been guilty of this, you think this is a trade, it's a great trade, it's going well, it's in the bank, it's a gift and it's a good winner this, and then it turns round and you feel doubly worse because you've already banked that euphoria feeling, that dopamine hit of this is a great trade, that's there in your body. All of a sudden, then when you get stopped out, not only do you go from neutral to the stop out of, oh, I got stopped out, you go from the peak thinking, yeah, it's great, to being stopped out. So you've got to be careful of that. And you see on social media all the time, guys, if you follow stuff on social media, someone says this is a great trade, I'm in this trade. When someone declares they're in a trade, that's normally when it's going to reverse, because that's when they feel the most comfortable. And actually, I've actually got a strategy specifically that I look for that in certain stocks. When I see people who are so confident about the position, I'll look to start fading that move. But that's by the by. So that's human nature, guys. Just watch out for that one. When you think it's a sure thing, you're probably going to be hammered. Number 2, always accept the outcome before you trade. This is a big one. So, the difference between a gambler and a trader, there's a lot of differences, but one of the big ones is that the gambler enjoys the uncertainty. He hopes to win, he hopes to win, he hopes to win. He wants that buzz, he wants that buzz. She wants to get the feeling of euphoria when she wins. The professional trader, she goes, right, you know what? I know that I could lose, I know that I could win, I'm happy to accept that loss, I'm happy to accept that win. Yes, you're not going to reduce all emotions from it completely, still going to be enjoyable to win. Of course, we like to have winning trades, but it's not going to be as kind of amplified, if you like, as the gambler who's going, yeah, and cheering and kind of feeling the emotions and stuff. And you should look at people who kind of gamble at horse races. When the horse is racing, they're all caught up in it and they're enjoying it so much more, and they're so excited and you can see all these people going crazy, and then euphoria when they win or disappointment, and it's that extreme swings that they crave. So in trading, we need to accept the fact that we could win, accept the fact that we could lose, but it's a business decision, and that's how we should be treating it. Number 3, don't take big all or nothing bets. Now, I think this doesn't apply to a lot of people, but I know many traders who really crave that kind of all or nothing thing. So they'll go in with a big size and they'll see what happens next day. They won't even look at it, or they'll trade over earnings and gamble over earnings. And again, that's just pure punting. There's no real process to it, and they might fool themselves and say, oh, there is a process, I think this, I've done this. It's not though, is it really? It's all down to the fact that they want the buzz of what could happen, the excitement, the unknown, the risk, the potential reward, that dopamine pulsing through their veins. And that's not trading, guys. It's perfectly acceptable to take risk like that if you've approached it from a different angle. If you've done proper due diligence on it, you've prepared your trading strategy, you prepared your risk, and you take a position. Now listen, I would never recommend just punting over earnings, but hey, if that's somebody's strategy that works out for them based on due diligence, that's fine. You know, we're all taking risk at some level, some more than others. And so, you know, that's coming from a place of methodical decision making rather than a pure punt for the enjoyment of the punt, if you like. So number 4 is avoid bragging, talking about winners. So slightly different from the sure thing is this is the winners. You know, if you feel that, hey, I'm a great trader, I'm doing really, really well, that's probably a time when you're getting influenced by the feel-good emotion of how the winners. And it's time to kind of step back and be warned that very often is when you just get a crack around the jaw. And I know from experience, guys, whenever I feel super confident in my trading, super, you know, oh, think I'm the best trader ever, look how much money I'm making, you know, always the time when the next couple of days, the market just likes to just go, get back down, just behave yourself. And so you learn to regulate. You learn to go like, right, I'm feeling quite confident at the moment. Let me just go back to the process, stick to the process, go back to the mean. You know, it's almost like, you know, mean reverting chart, right? The mean is you want the moving average to be climbing slightly. Sometimes you're going to hit that lower Bollinger Band and you're going to feel not good. You're going to have a bit of a drawdown. You have to pick yourself up back to the process, cover, back up to that mean. Sometimes you're going to feel really euphoric and things are going great, and that's when you have to kind of dial things down a little bit. So, you know, it comes in swings and roundabouts. So avoid bragging, talking about winners, and kind of, you know, fueling that dopamine hit. Number 5 is stick to a process to avoid emotional decisions. So the thing is, guys, is that this is all very well and good, but the point of this is that, as we've talked about many times before, and those of you who are subscribed to the channel, watched a lot of the videos, will know we talk about this emotional decision making or making decisions based too much on emotion. And then we talk a lot about how you can manage it, you can't ever stifle it. We're not looking to stifle it, looking to harness emotions. But the key here is that if you've got dopamine flooding through your body and you feel euphoric, your decision making is going to be distinctly different from somebody else who is sitting in a calm, centered state, taking all the information and deciding whether to allocate risk capital to a deal or not. Two distinct different people. It might be exactly the same person, but two distinct different states are going to come up with two distinct different outcomes. The euphoric nature of dopamine and of any other kind of stuff that we've got in our bodies making us feel good, then it's going to make us take poor trading decisions. Now, it's not to say emotion shouldn't play a part in trading decisions to some degree, but when it's completely fueled by, even the other end of the scale, by fear of losing, fear of this, or it's completely fueled by euphoric emotion, you're flooded with dopamine, you're feeling great, then you're never going to make solid decisions. They're always going to be influenced by that emotion as opposed to, and probably you're going to want to take more risk. Probably you're going to want to really pile on a risk and feel overconfident, over cocky, and start taking trades you shouldn't. And the other end of the scale, the trader who's fearful is going to want to take little risk, going to want to have tight stops, going to have a death by 1,000 cuts syndrome. So it's somewhere in the middle. So anyway, guys, those are 5 ways to control that dopamine hit in trading. Go and check out that first video. Like I say, if it's not quite uploaded yet, if it's in the queue, it's coming along, make sure you're subscribed and hit the notification if you want to be alerted when it is uploaded. Let me know your comments on this one in the comment section below, guys. Interested to hear your thoughts on this whole video kind of thing on dopamine and how it affects trading, etc. And while you're down there, check out our channel sponsor, as I linked them in the description below. Take care, keep your risk managed, whatever you're doing. Goodbye.